to get home ownership, with the right price homes when they had reached down to the 200,000s, and with the down payment assistance. Yeah, one income was very possible.
Wow. So one income, roughly how much were they making?
About 34 or $35,000 a year.
Wow.
Yeah.
And able to do it. So
Yep.
so that's great. So what I'm going to do, and unless anybody has any specific questions, like I said, overview, we're going to talk about what this program is, get much more into the specifics. Number one, who can it help? So who out there can this truly help? Because there's not just qualifying limits. They still want to make sure that you can make the payments and that you got good job stability, credit, and so forth. So for some people, it takes 2 to 3 years to get prepared to be able to take advantage of these programs. So one, who qualifies for it? And then there's also income limits, but there's low income programs, then there's moderate income programs. Low income programs are 80% or below area median income. So Alex, do you have those numbers with you as well to be able to break those down with the
I do.
household size? So
Yeah,
it's
I do.
based on how many people are on the loan. So if there's a household size of four adults that are all working and they're on the loan, there's a certain amount of income. Does it have to be, it doesn't have to be 4 adults, right? It could be two parents and 2 kids count as a household size as 4.
It's the household size. It's everybody that's a part of that household.
Okay.
So it's not just anybody that's going to be on the loan itself. So it is the household itself. So husband and wife, 2 children, that's the household size of 4. Brother, sister, and some other siblings or so, household size of 4, right? So it's everybody that's going to be in the home.
Yeah, and just to be blunt, because I actually received a text from somebody saying, you know what, I've heard about these programs, but all the lenders I know always tell me not to, that basically their client doesn't qualify for it, or it's really not in their best interest. It's a higher interest rate, and there's a lot of people in the industry, let's just be blunt, that aren't promoting the good cause of what's out there. And in my opinion, a big part of that is, number one, it's a lot of work. Number 2, there's not a lot of money in it. Number 3, it takes a special business model, such as what VCCDC has. They are a nonprofit organization. Let's be very clear. They are a nonprofit organization. They're not there to try to make money. They're there to serve the community. And that's where they get this funding and get this access from. So you'll have a lot of people in the industry that will say things, and this forum is about getting the accurate information out directly from the source. And Alex is the source. He is the expert. I don't just say it just to promote him here. He's been doing it for over a decade. His life's been committed to this, and you're going to see he's very talented. I mean, he would be successful. He is successful, but he would do well in any field possible. I mean, even outside of lending, the guys, I think he's going to be running for president here probably in the next couple elections if you watch some of the old videos. But very talented, very educated, and knows his stuff, but he's got a passion for helping out the community. So that's why we have him here today, and I appreciate all your efforts to get on here and to learn about this, because there's so many people we can help out. And because it is a nonprofit, they have limited marketing resources available. So it's truly by word of mouth, it's by experiences, and it really is the best kept secret. So was that a proper intro for you, Alex?
That was too much. I'll pay you later, man. Thank you.
All right, man. We'll get that beer after this when we can.
This is all done. The virtual beer
can come within 6 feet again, right? So Alex, I guess just to start with, unless anybody has any questions, that's what we're going to jump into. Let's talk about kind of how it works. But I'm trying to think if it makes more sense to talk about who can this help first, because even after you start talking about how it works, there's some people that'll get really excited, but they make too much money to qualify where they can get all of the assistance. But let's kind of go best case scenario. You get somebody who fits in, we always kind of call it like that box, right? That area of they have to make enough money, but not too much money, where they can truly reap all the benefits of the programs that are out there. Do you mind talking about that? And then kind of the steps of, if we know somebody who could be a candidate, what are the proper steps?
Okay, so break that down.
Okay.
In the intro, I want to kind of touch a little bit on something that you mentioned that you hear a lot about, that people don't qualify, it doesn't work. In fact, your parents just closed somebody last month that we helped. And I'll give you an example about some properties on the east side of Ventura with his like North Bank, on Paloma Street or Paloma Complex, all of those streets. There's a lot of properties there that are resale restricted. They were resale restricted with the city of Ventura, and they're reserved for moderate income homes. Now, there's a very different formula on how they calculate eligibility income. So I'm going to be using those two words very interchangeably. The eligibility of programs, you mentioned you can make a certain amount, but not too much. That's the eligibility criteria. And then we still have to do the other part, which is the qualification for a loan. Normally, 99% of loan officers out there and lenders just work on qualification. What's their credit? What's their income? What's their this? Boom, we can get them into this program, and we'll look at guidelines for Fannie Mae, Freddie Mac, FHA. We take a much deeper dive on that. We look first and foremost at the eligibility. Is there any money that this family can take advantage of that will help them for their purchase? We look at that first, and we calculate income, which is a very different formula, a different way, a methodology that's being calculated. And then if we know that that income is available for them, then we look at the qualification. You know, do they meet the guidelines? Can they get, what's their FICO scores? All the other things that we also need to do. So there's two layers of vetting that we have to go here. So, you know, the notion of somebody isn't qualified, those, no, they're over income, those don't make sense. I think it's a disservice, and I'm going to say, you said it bluntly, I think it's a disservice to folks that are out there to not have an opportunity to look at these programs. And I'll give you an example exactly why. I don't have her permission to share this yet, but she will be sharing her story with us. Somebody that had been looking for a long time, wasn't able to buy more than 540,000, 515, large household size, told them about these opportunities that are with the city of Ventura, these moderate income homes. They had already told her, nope, you're not eligible for that. But the way that income is calculated was very different. The housing authority of the city of Ventura has a little loophole in their system that allows people to be eligible because they take a 3-year average, for example, versus a year-to-date average on their income. So he was able to go in, make an offer, get his offer accepted. He was eligible with the housing authority of the city of Ventura, and he was qualified with the loan, and this family was able to move in. Without that extra step of saying, wait, we know exactly how the housing authority calculates income, and it's not the typical way, they would not have been able to buy that. In fact, they had already been turned away multiple times because that was the only house within their reach at that point. So that's one way, Brandon. So we'll look at the eligibility and the qualification. They're out there. A lot of people that don't take advantage of these programs or services is because, you know, again, they might be too difficult. But what we do as a lending organization is we do take a full pre-approval of somebody. There's too much on the line. We need to make sure that they're eligible for these programs. So we're vetting and we're verifying income. We're verifying the forward income, projection of income, because for eligibility, we project income to the future. For qualification, we look at the past. Very different models. So we do that to the T, and then we look at the qualification program and then provide a pre-approval. So it's a little bit of a slower process, but we know that we're getting someone that is going to be pre-approved, that it's going to close at the end of the transaction. You know, there are other programs that we rely on, like the city municipalities and stuff that have their own programs, their own guide, their own vetting process, and it makes it complicated. And we've worked with those cities to say, look, there's got to be some ease in this. In fact, the local Ventura County NARREP past president has been working to say, how are we more transparent, working with the different municipalities. That was a big push with NARREP, and we supported that, to say, how do we make this a little bit more transparent? How is the process? Could we streamline it for agents so that they're not afraid of these programs? Because I've heard horror stories. One horror story, you know, bad news travels 10 times faster than good news.
Right.
And so, but going back is, what do we need to do? What do we check? Is first step is getting pre-qualified. You know, you don't want to show anybody any homes until they're eligible and until they're qualified. So those are two very important things, and they have a full pre-approval. I know that you get a lot of pre-quals. You know, a lot of people, I think in this business, time is money. Mm-hmm. And so we'll just give me the lead. Here it is based on the information that they're giving. Here's a pre-approval. And once they're in escrow, they do all of the verifying. They do all of the vetting because they're meeting with so many people. We want to do that beforehand. We want to know that when they're spending the time to go out and shop with their agents, that they are pre-approved and they're going to have a very high probability of closing. I'll never guarantee a closing. Anything does happen. But when we look at our numbers, we have a high pull-through rate in the high 90s. So answer the no, Brandon.
That was perfect. So just to kind of jump into it, because it's you talk about municipalities, so there's different types of down payment assistance, and this is key for the agents to understand, right? So the program that gets me the most excited when somebody fits into a particular type of down payment assistance, and this is 80% area median income or below. And part of the reason why I do know quite a bit about this is because I work side by side with Alex. Alex taught and trained me and taught me everything. I led, at the time we had a realty, I was the director of realty. Alex actually recommended for myself to meet with his boss, Bertha Garcia, who is the executive director of VCCDC. And we had an awesome time together. They were doing a program at the time called Acquisition Rehab, which we would acquire foreclosed properties, because as the values came down and foreclosures and prices were coming down, cash investors were coming in and buying everything up. So hedge, you talked about it, before in our previous video, just how these investors come from out of state, they buy all the great properties up. So now it truly screws up the opportunity for somebody who now can finally afford to buy a property at a payment that they can afford. We were getting waxed. We were getting wiped out. So even if somebody did the proper steps and went through the down payment assistance, went through, which they have coaching through counseling, it's HUD counseling, it's all free. You can go there, you can work on your credit, you can work on your savings, you can work on working on your debt, getting your debt down. They have all those services there. So go to vccdc.org, point people to that direction. You can reach out. Phone number is 805, what was it again? Is it 273?
273-7800.
273-7800. So definitely take those numbers down, and we'll leave those links afterwards. But there's so much free help out there. And more importantly, when I talk about getting excited about those that fit this particular box, if you want to call it, they make enough money, but not too much money. So household size of 4, it's roughly about $80,000 ballpark. And then Alex is going to break down so you understand how to, in a sense, be able to pre-qualify on your own. But obviously that's not good enough. You can't promise anything, but you can say, hey, maybe there's a program that may work for you, and you need to speak to Alex Vega, and then get them over to that area. But basically, you're qualifying for more money. You can use free money. So down payment assistance, there's different types of down payment assistance. When people use this money in this particular type of loan, the biggest thing is they got to intend to occupy. They got to be a first-time buyer, but it's not just people who have never purchased before. It's true first-time buyers. It's people who haven't owned a home in the last 3 years, as well as it's also somebody who just recently went through a separation. So is it more than a year ago, Alex, for the separation, or could it be just within the last year?
As soon as those court documents are filed, if they're divorced or displaced spouse.
So it could be last month. So we always say no strategic divorces, right? Just to qualify for the program. But so basically those are the 3 eligible criteria. Then they have to fit in the income limits. They have to make enough money, but not too much money. And again, household size of 4, almost 80,000. That's a lot of people.
No.
A lot of people we know that make around that amount. Go ahead.
Based on the 2020 HUD income limits that just were released through HUD, a household size of 4 is $90,350.
So $90,000 for a household. So that's husband and wife, 2 kids, or single parent, 3 kids. That counts as a household size of 4. And then they can qualify using this down payment assistance that, again, a portion is forgiven. So at this time, you were saying it's a 4-to-1 match. So roughly about 20,000, 22,000.
22,000.
So buyer comes in
4-to-1 match.
Yeah, buyer comes in with $5,500. Then the wish fund that is forgivable after 5 years is up to $22,000. So this is money that could be used towards their down payment, towards their closing cost. And then remember, if we get it over 20% in down payment assistance, now you eliminate PMI. That's an extra $200 to $400 a month in their payment. So increases their purchasing power. So for a lot of people, and they have a study that's done by Cal Lutheran, and the only reason why I know these recent stats is because of our interview, that basically said 90% of the people that they've helped into home ownership would not have been able to buy a home if it weren't for VCCDC and their programs that they offer. That's huge. So 9 out of 10 buyers they helped out. They helped out 7 last month. So 6 out of 7 of those buyers would not have been able to buy a home if it weren't for this. For some people, this is their only opportunity into home ownership. And as we talk about the affordability crisis in California, almost 700,000 people left in 2018. It's been a common trend since 2011. More than 1 million people have left the state. It's going to continue to happen. We have a lot of millennials. We have a lot of youth here. We have, I mean, it's not just youth. It's everybody who feel that it's out of reach. Well, VCCDC can give a possibility to some people, not everybody, but for some people that can take advantage of it. Think about it, 20,000 that you get forgiven. We actually got better news by the end of this. And I don't know if Alex, if you're able to share it or not, but there may be more money coming. So even more to help out. And there's other parts of that layered financing. So I wanted to just kind of hype it up a little bit, give it a little bit of it, because there's a lot of details here and it's very easy to get confused in the details. And Alex, are you willing to do a one-on-one with anybody that reaches out to you on this call?
Yeah, absolutely. Yeah,
Awesome.
of course.
Awesome. So do you want to break it down now just in terms of, let's talk about how it works. And then you kind of touched on who qualifies, but we can really dig deep into that because that's the key thing right now.
So let's talk about just a comparison. I'm not going to be able to share my screen, but if we I want to take a typical family of 4 that's earning $85,000 a year. Okay.
Do you want me to make you the host so you can share this screen?
Because I'm going to be working it in my system here, but if you would like to, I mean, it's a separate computer that I'm working on.
Okay. I see.
I have this one here. Cool. So $85,000 a year, according to 2020 guidelines, 2020 HUD income limits that were just published. $85,000 a year, household size of 4, is considered low income in Ventura County.
Wow.
That's amazing. Just think about that for a second. $85,000 is still low income in this county. So when we take that they're first-time home buyers, probably not a lot of savings. The typical loan that will always be offered is an FHA 3.5% down. That's every agent that's out there if you're working with your lender, FHA. So with an FHA, 3.5% down at an $85,000 income, this family right now, because some of the changes that are happening as a result of the coronavirus and the hits that we're seeing in the mortgage industry right now with the erratic interest rates, like we touched a little bit about it yesterday, Brandon, that it's more of a servicing and liquidity issue now, more than a stock market to bond relationship. So that at a 3.75% interest rate, fixed for 30 years, the maximum payment that they could sustain to be at just under 45%, we're not assuming any debt or anything, would be a $490,000 purchase price. Okay? A $490,000 purchase price with 3.5% down is $17,150. So when we take this same family, and as we know, they're low income. So when you say, these programs don't exist anymore, this is your family right now. This is your client today. This is what we know that based on today's, on the 2020 income limits, they're considered a low income family. We can provide this family with $70,000 already in down payment assistance. And we talked about those yesterday, which is our VCCDC Cal Home Loan. The WISH program that's been already opened up in April, on April 1. Now, I want to go into a little bit more detail about that Federal Home Loan Bank program that just changed in 2019. This is the way that it was allocated, that these funds were allocated by the Federal Home Loan Bank of San Francisco. We've known the Federal Home Loan Bank well. If you go on their website, there's a family, one of our families that was featured. They came out to do a one-on-one with this family and with our organization because of the success that we've had with this funding source over the years. So we know the Federal Home Loan Bank folks well. We know the director that just retired a few years back and the new director. And they came out to Ventura County for a big disaster relief program that we did. And they came out to talk to everybody that was there. And we're going to have another one in the future, another big program where we bring the Federal Home Loan Bank, the Federal Reserve Bank, and these players into the county to bring this money to understand what the county is. So that's been a big selling point. with this federal home program, we used to get allocated funds. Now it's a one pot free for all. This is where this could potentially be used up quickly. That one I will give to everybody because it's now the whole region. We got a few states here that are in this western region of the Federal Home Loan Bank of San Francisco. And so as we go in there, it's everybody that's in escrow will be able to go in and reserve those funds 4-to-1 match. So we talk about the WISH and we talk about our VCCDC county program, the Hope to Home, which is also up to $23,000 in forgivable money. After 5 years, it's forgiven. So in just those examples, 25,000, 22,000, and 23,000, 45,000 is completely forgiven after 5 years, stays as equity in your home.
That's awesome.
I don't care who you talk to out there. No one has this. It doesn't exist. It just doesn't, unfortunately. And I say that with no excitement whatsoever. I wish that there were more people doing this, but it's just not going to happen. So when I change this example at $490,000 purchase price on an FHA loan that everybody is pushing for 3.5% down, payment's about $3,100, $3,158. And I'm reading it because I'm looking at my screen here. So please don't. I'm not going through all of what the APR would be and all of that right now.
You said 3158.
3158, principal, interest, taxes, insurance, and the mortgage insurance premium with the FHA on a 3.75% interest rate, with the APR probably at about 4.3. Okay. If we change this up with this same family that's earning $7,083 a month or $85,000 a year, and we provided them with that $70,000 in down payment assistance just on this program, their payment is now $2,872. However, we can get them out of the FHA if we didn't do the FHA program, relieve a little bit of that PMI at that point. So now a payment, if we went conventional with this, because they don't have to come in with all of that down payment themselves, $2,733. Okay, so that's a difference of about $400 a month.
Yeah, it's huge.
Now, the other part is, since they could sustain a $3,100 payment, the maximum at 45% debt to income ratios, that's the max that they can sustain, we can in fact increase their purchase power with this down payment so that we can now have more home for that payment. So we can go up to now a purchase price of approximately, we're going to go back up to what purchase price with $70,000 down now generates a $3,100 payment, right? And it looks like we are at about, oops, sorry. Yeah, it looks like we would be at about, here, just a second. With $70,000 down, we would approximately be at about a $560,000 payment with the same, everything else, all else staying equal. That's a payment of $3,162. So that's the difference.
That's huge.
Had a family at $490,000 with FHA at 45% max. We're not counting any debt on this family, any back-end ratios. From 490 to 560. Why? Because they're $70,000 down. That's the difference. I know when you guys are out there as agents, if most of you are out there and you look for homes at 490 or look at homes at 560, there's probably more opportunities there. I don't know because I don't have access to that information.
Absolutely. No, that's the difference, at least I know in Canberra right now, between getting an attached property, condo, townhouse, or duplex, or some type of attached property versus a single family dwelling. You need to be minimum 550 plus, and it's probably getting closer to 590 to 6. So this is exactly what we're talking about. It gives just enough of an extra push that can make somebody where they're dead in the water to actually becoming a realistic homeowner. And these are at much higher prices than I remember what we were focused at. I mean, we worked with a lot of people in the 200,000s, 300,000s, had to get really good at 1-bedroom condos, 2-bedroom opportunities. I still know those areas pretty well because of my time there, and that's all we had access to. So this extra money is huge. And the key is, and I guess you talked about there's only so much funds with it. I know it's a lot of high level stuff, but just so everybody understands how it works, it isn't unlimited money. This isn't something that's going to happen forever. who gets that money allocated? You said the people that are in escrow right now. So typically, how long does it take for, your average person to get ready? I know it's different for every person, but from
Yeah.
your experience, you see a lot of people that come through the doors. What would you say on average is a good time frame to give people to get ready to be able to see if they're eligible?
If somebody hasn't gone through the process, because a lot of people are fearful, they don't know how to take that first step, and they usually contact an agent. I think 80% of people that are first interested in purchasing contact agents. Very rare do they contact a loan officer or a nonprofit or a counseling agency. What we are seeing today, though, that with millennials and the internet and the research that they're doing, they're finding organizations like us, because we're one of organizations around the country. One of about, as far as CDFIs that focus on residential home lending, we're probably the only one. We're definitely the only one in the county, but we're probably the only one in the state of California. There's some other really great organizations in Los Angeles and Orange County. Some of them focus on lending, but not most of them don't. They're more developers. So we would we would look at always trying to bring in that information first. So they're always going to contact an agent first. So it's up to the agent now to lead them in that possibility, in that direction. And I know that it's hard. It's hard to make a change. It's hard to work with someone. It's a different type of model that we have. I think that the service that a lot of realtors have with whomever they're working with right now, it's quick, it's fast. They know them. They provide this approval, or they'll do it in 20 days. So we're not able to do that. We won't be able to close in a 20-day time period. We're averaging today about 35 days. 35 to 40 days. Now, look, there's a lot of major banks out there that are still doing 30, 35 days, 40 days, especially right now. Now, when I say right now, it's historically with the COVID-19, it's a different ballgame.
Right.
We don't know how this is all going to kind of go through from beginning to end, obviously, with realtors or appraisers going in to just do street views. How comfortable are these secondary markets going to feel about a lot of those things? A lot of buyers that say, no, my house is really nice inside. I want them to look at the inside, because then the value won't be there, right? So it's a different game, but we are doing that. So again, when we meet with somebody, though, we do want to see everything. I think it's a disservice to the agents that we provide just an approval with no real verification of many things. I mean, it's getting the information, talking to them over the phone, kind of a quick sign of the cross, and then here's your pre-approval. Right. We don't want to do that. It's too stressful. It really is. So I hope that people understand and appreciate that we do want to give out a full approval, because folks have been vetted.
Oh, that's great. So you said on average it was about 35 to 40, because also what I want to do is help prepare agents. So when they're writing an offer, so I bring a buyer to you, I'm writing an offer, I need to present it, right? Some of the challenge, just like the same thing I have with VA, some of the challenges I need to kind of educate, because there's a lot of myths out there, misconceptions about down payment assistance, right? What does this mean? So when I talked about getting excited about who qualifies for these programs, it's twofold. I mean, one of the biggest thing is these buyers don't have resale restrictions on this type of down payment assistance. Right. So they get to realize all the equity in the home. So not only are they getting help with the money to put down that's forgiven after 5 years, when you talk about $45,000, that's a check for $45K. So after 5 years, and it's 20%, right? Every single year. Is that how it works?
20% forgiven.
If they sell it after 2 years, then they'll get 40% of that forgiven, and they have to pay off the rest of that.
Right.
Right. Yeah. So they get that. They also get to realize the equity. They don't have to resell it to a low income family. They can sell it to anybody in the regular market. So sometimes when you hear about these municipalities, like you help the buyer in Ojai, right? They got a great opportunity, a property worth $600,000. You said the loan amount was around 300?
298.
298. So their total payment for a 3-bedroom property in Ojai?
It was about $1,500, $1,600 for them.
$1,600 to own a property. Now this one has resale restrictions, so they do pay it for it when they sell it. So they won't realize the equity like everybody else that we're talking about for the down payment assistance that VCCDC puts through. So there's different types of down payment assistance. So people will kind of throw it all at once and say, no, I had a bad experience with that. I'll never do that again. So we have to educate the agents So the agents realize that sometimes this is an opportunity for a family that it literally breaks the cycle of poverty, because now they become homeowners, they create some wealth, they can pass something down to their kids, they can do all these things that they thought was impossible when you were talking about people making 30,000 a year buying a home. And I remember firsthand somebody who made roughly about 50 a year, who purchased her first property, single mother, bought a 3-bedroom, 2-bath, and it was an awesome story, you know. So just wanted to share some of those stories and those details so that you understand. So in writing the offer to play it safe, would you say about 45 days would be a safe bet?
That would be the safe bet. That would be the safe
About
bet.
45 days for the offer.
Right.
And then how do you typically recommend writing the offer? Because it's a portfolio loan, so it's not an FHA. Sometimes it can be FHA, but a lot of times it's portfolio. We say portfolio conventional because it's
Right.
closer to the conventional guidelines. So how would you recommend writing it and keeping it as accurate as possible, but also not getting shot down before you even,
Yeah.
get to first base?
Right. So there, and it'll always depend for every client. Everybody, some might still need to be based on credit, based on certain issues, and FHA is the best way to go. But FHA for us won't be. I'll give you an example. We did very, very little FHA over the last years. FHA has been a very seldomly used program for us at VCCDC. Why? Because it's expensive. It created the fees. We know that from the Great Recession, when that happened, FHA was the only player providing loans in the country in
Right.
2009, 2010, 2011. It was the only player in town, and in fact, there was concerns that they were the only ones that were too leveraged. They were too involved in the marketplace. So if something else happened again, that the hit was going to be to the taxpayer, since we're all the ones that are guaranteeing those federally insured mortgages. So they became to get less attractive by being a little bit more expensive on their fees. They increased their monthly PMI and their upfront MIP, mortgage insurance premiums. Now, the reason why they did that was so that they would be less attractive, so that private capital can begin to come back into the marketplace, and that FHA wasn't the only one doing the majority of loans in the country anymore. So that was a very important piece. That still remains the same today. FHA, if you're not putting more than 10% down on a loan, the MIP stays on for the life of the loan. You will have to refinance at some point in the future. So listen, we'll do the math side by side. And if FHA is the best deal for that particular client, then we go with FHA. If it's the only option that they have, then we do that. But in many cases, for many others, it's the go-to. It's the way to go.
And why is that the case, Alex? I don't mean to interrupt you, but let's be specific. Let's just hit it on the head. Why do many loan officers push that FHA product in many situations? Is it more profitable?
It's simply more profitable to them. That's exactly it. It's more profitable. And in most cases, it's the most lenient one as well for guidelines wise, to get somebody with a very low FICO score in there. It's simpler in the sense of those guidelines. But the fact of the matter is, it makes more money for the offices in those organizations.
Right.
Plain and simple.
Yep.
So you mentioned that. Now, we're always going to look at those side by side. So when someone's going to write an offer, it's going to really depend. The portfolio programs have come and gone as the need has resulted for different banks that need to meet their CRA. We talked about the Community Reinvestment Act in the last segment yesterday, Brandon.
Right.
But certain banks need to meet that CRA obligation, the Community Reinvestment Act, for investment tests, for lending tests. Once they meet those limits, they're done. We had a situation, I won't name the lender, and it's not with anyone that we work with today, but they had a certain amount of monies that they needed to provide. They designed a program. It was a down payment assistance program that they needed to provide because of a lawsuit. They lost a lawsuit. They needed to bring money back into the community. They do it through these programs. The moment that they reach the limit, and again, it's no bank, no national bank, it's a smaller bank out in Los Angeles County. As soon as they reach that, okay, we've done all the loans that we had to do, a certain amount of millions of dollars, we're not doing any more. There were people in the air. There were people, planes in the air, and they shut off the control tower, basically. So, that's where we're really careful, and we help design and we help talk to these banks about what is this program, what does it do, And many of them, the ones that have been really successful, have been many people that have sat on our board as well, and have really had that trust, and we've worked in great synergy together to design and to work with these programs.
Alex, real quick, just on the CRA, just for everybody, because in case they didn't watch the video yesterday, we didn't edit it. We aimed for an hour, went an hour and 37 minutes, just so you know, Alex. A lot of good information. But the CRA, when you talk about the Reinvestment Act, is it Community Reinvestment Act?
That's correct.
Basically, that was put into place because there was a lot of redlining that was taking place back in the 80s. Is that
the 70s? Well, before it passed in 1979, I believe.
Okay, so 1979. So this was to encourage banks to basically make money available to more people, right? And so to give them some type of incentive, a motivation, if you want to call it that, to focus towards many families that really wouldn't even be considered to try to purchase a home. So this CRA is huge. And it is something, as Alex mentioned in the video yesterday, it's something that is being talked about getting rid of, which is not good. There's a lot of people that need this help. So it's important that we're aware of it. I don't want to spend too much time on it, but just at least give that little background as you mentioned CRA, because you're hearing DPA, down payment assistance, CRA, a lot of different acronyms here. But just to be clear, because we're giving you kind of high level view, and then let's get very specific. We don't expect everybody to memorize and know this as well as you know this. But more importantly, what do the agents need to know so that they can help empower as many people as possible, as well as know what policies are being pushed out there right now?
Right. And, and I kind of talk a little bit about it and go into somewhat of detail because it's important how our world works, why we are where we are today, what happened, what's holding certain people's feet over the fire, why certain programs exist for some and not for everybody. There's a lot of laws, there's a lot of statutes that are built around this, right? And if they're not doing loans for moderate income buyers, it's because they just simply don't get credit for it. There are some banks that don't even do loans for moderate. So doing loans for moderate, they get credit for it. They need to meet this because why? If they ever want to merge with another bank, buy another bank, the examiners are going to look at their CRA. And if they're not doing a good job of meeting CRA, then they're not going to want to allow them to take over a bank in Ventura County that has been great to the community. And then here comes this other conglomerate and going to scoop it up, but not really commit to give back to the community. Those things matter. And we see how poverty cycles and how families and counties are affected as a result of those decisions. So that's where CRA is. So write the offer, Brandon. It's going to depend. A lot of the down payment assistance that we do could potentially be a conventional loan or portfolio products. Portfolio products right now still exist. They've, again, as a result of the changes that we're seeing, they're not as aggressive today as they were last year or years prior. So one of the major programs that we had was just 3% down, no PMI, as long as you were earning under $113,000 a year or less. It's a phenomenal product. And that one is on pause. So, as we look at that, how would you write the loan? If somebody is eligible $70,000 in down payment assistance, I don't know the purchase agreement very well. I'll have you help me on this. Yep. But you're writing in the offer, you're subtracting the amount of other subsequent, because they are subordinate liens. Right. That would be 70,000 and there would be 3 basically. So this is a 4-layered financing deal. There's 4 loans on this. And so when you look at, how much your earnest money deposit's going to be, how much the remaining amount and what the loan amount is, we would provide that from the pre-approval letter that already breaks down that math for you. And then how writing it on the contract, Brian, I know we had discussions this over the years.
Yeah, no, we talked about it. So basically, so let's use 70,000 as the example, right? And we'll say 500,000 for the purchase price. So that's roughly 430 for the first loan amount. And then 70 on the bottom. So, on the bottom where you would normally request for closing cost help, there's a box that you can check and fill that in. That's where you're going to break down the second and the third and just put what those actual amounts are. And then you can just put that, are utilizing VCCDC, down payment assistance, second is this, third is that, so that you are properly representing your offer. But it's a little bit easier to digest than trying to put a first, a second, and a third all on the offer. But again, if you need help with that, feel free to reach out to me. My cell is 805-815-1327, and then email Brandon at vhsre.com, veteranhomeservicesrealestate.com. So feel free to send an email. Be more than happy to help you with that as well. But Alex, so you've helped, VCCDC's helped roughly 2,500 families between becoming homeowners, between foreclosure prevention, you have HUD counseling, you also have home buyer workshops. So anybody who goes through this down payment assistance does have to go through an 8-hour accredited by HUD agency, which VCCDC is a HUD approved agency for their counseling session. And they do the down payment assistance. If they go online, it's about $100. Is that right? 90 to $100.
$99, yeah, through eHome America.
eHome America, so they can do it online themselves if they can't make one of the classes. But VCCDC also provides the home buyer workshops, which they do one in English and one in Spanish. Alex, you're bilingual as well, right?
Right.
And as well as many of your teams, so many Spanish speaking ability, which is great, you know, to help out many people. So teaching classes in Spanish and also in English. And it's usually, I know in the past it was once a month, but when I recently spoke to Bertha, she mentioned trying to increase that, right? But I know we had the whole stay at home order. So you guys are doing that online now, is that correct?
We are doing it online. We just had one. It was successful, good attendance.
Good.
And we are doing some, we're doing now some in Kern County. So that's where we're averaging about 2 a month now from what I'm looking at the 2020 calendar. Of course, with the COVID-19, a lot of changes, but we're just going online with it.
So Ventura County, Santa Barbara County, Kern County are the 3 areas that you're servicing right now for this down payment assistance?
And Los Angeles County.
And LA County. Yeah. So it's anybody looking for properties in any of those areas, they could take advantage of this. A lot of times you'll hear about City of Oxnard has down payment assistance money. And Alex with VCCDC can actually layer money from them as well, yeah. But then it gets into a little tighter box, a little tighter restrictions.
Yeah.
So it's not the same. So if you hear somebody said, oh, I had a bad experience with City of Oxnard, that's different than VCCDC's down payment assistance. And I have to kind of rehammer these things because there's a lot of myths out there. Again, this is about getting the accurate information out there because there's a lot of people who can take advantage of this.
Right.
So that's to be clear with that. Any other things that you want to share that you think is relevant? So the home buyer workshop, it's kind of broken down. You got a lending section for about an hour, 15 minutes, realty for an hour and 15, and then you do have like a home inspector will do a section. They'll talk about credit counseling, right? Credit repair, how to save. So it's everything you need to know. It's actually good. And for any agents that want to check it out, you're welcome to do it. But for VCCDCs, there's a $25 fee, but there's a promo code you said to waive that fee?
Yep. There's a promo code. It's on our website. I'm not sure what the promo code is, but it's when you're looking at registering, look for the promo code that'll pop up there on the website, and it'll give you that access.
So if this has piqued your interest, I'd recommend at a minimum to try to attend one of those workshops. And you're going to find out quite a bit more of all the different services that are available at VCCDC. And I guarantee there's somebody out there that needs your help that could take advantage of these programs and these services that are out there. So, those are really the keys. And I'm not wrapping it up. I just want to make sure I hit those points because, most of the people have stayed on, but there's a few that have come on and off. Any other things that you think is relevant just in terms of trying to really understand that layered financing? Because we didn't get into the 3% simple interest. So let's just talk about that $70K. Somebody qualifies for $70K, right? Let's talk about the part that's forgiven and then the part that is the 3% simple interest.
So when I mentioned that example of the $70,000, how that's broken up, and been recipients of VCCDC Cal Home. It's in our books. We're responsible for it. It sits in our bank account. We fund it. We service it. We take payments on it whenever somebody needs to pay on it. So, and we were just awarded an additional $3.3 million that is going to be for moderate income home buyers. Now we're still going through signing the agreement with the state of California, getting our guidelines approved because we are writing our own guidelines on these on top of what the state guidelines are, just specifically for Ventura County. And those guys are going to be up to $100,000 in down payment assistance.
Wow.
So now, again, it's the VCCDC. We've already received the VCCDC Cal Home for years, and we have it. And as people pay us back, we put that back in the pot and help more people out. So we're constantly recycling this money. And we've just, we were awarded only two organizations in the state or out of the entire funds, we received more than 50% of that allocation that was going to be going out. Why? Because we've been using these programs for years. We're successful at doing it. We know how to get it out into the community to the right people and know how to close on them and service them and monitor those loans. I don't say, I know I sound like I'm patting myself on the back, but it's not me. It's a team back here.
Well,
There's a lot of smarter people
You've
there.
been doing it since, you said 2007, 2008?
We've been doing it since 2006, 2007. So when I came on 2007, it was, we had already received our very first award of these Cal Home funds. So we have $8 million working right now, continuously working. And we have about over $1 million before this 3.3 million that we haven't received yet. But we have $1 million that's usable for low-income families, right? This other one is going to have a separate set of rules because it's for moderate income now. So as we talk about this moderate income home buyers, this is the one. This is it. But let's talk about the one that we have. Low income, VCCDC, Cal Home. And this is lent out. This is given out. And it is deferred for 30 years. What that means is you don't have to make any payments. The buyer doesn't have to make any payments for 30 years. It stays on there unless they sell the property, unless they don't occupy the property anymore, then there would be in default. Because again, we're trying to house people, not create investors here. We want it for home ownership. And so that carries a 3% simple interest. So that's a simple interest on the balance. It's not on top. And so it's not a compound interest. It's a simple interest at 3%, which is great. Again, when you look at, you don't have to pay you don't have to finance that amount at a 4.5% or 4% or 3.5%. This is a 3% interest. So it's going to be usually always lower than what the market rates are at the time.
And to break down the simple interest, that just means that they don't have to make the interest payments now. They could if they wanted to, but they don't have to make that simple interest.
They don't have to make it. But what the simple interest is also is that the interest is only it's only calculated on the balance of the loan itself, and it's not on the balance and the interest that has been accrued over time. Okay. So it's just not a compound interest; it's a simple interest formula for that.
Perfect.
So, for example, if they were to receive $30,000 for down payment assistance in the Cal Home funds, they have $900 a year in interest that accrues, right? $900 a year. So when they pay that back, they're going to pay that back with the interest at whatever point. They can pay it back whenever they'd like. We don't require payments. You're not going to have any late fees on this. People come in and make payments whenever they feel like they have extra cash and they want to pay this down. Perfect, not a problem. Right. But this program is also a way to build wealth because if instead of making that payment of $120 that it would be a month on your mortgage, you put it into your 401k that is compounded interest versus simple interest over here. When the time comes that you have to pay this back in 30 years, you should, who knows now with the market where it's at, right? But you should be able to have, the theory is that you'd have more money in that 401k that could be potentially matched by your employer and that is earning interest on a compound basis versus the simple interest over here. So that's that one. The WISH program we talked about, it's a 4-to-1 match. For every dollar that the buyer comes into the property, we match it by $4. And that is forgiven. Every year they stay there, it's forgiven 20% per year, which on a $22,000 is about $4,400 a year. That is forgiven. So if you decide to sell your home in year 4, you've already gotten the majority of that forgiven. You only need to pay back the $4,400 left on that last year, right? That's it. Now, the Hope to Home program that we are still, we're just finalizing the note and the deed on this, is another program for low income in the county of Ventura, Hope to Home, which is up to $23,000 that would help with closing costs, down payment, or both. And that is another one that is forgiven after 5 years, up to $23,000. As I say up to because it's as needed. Now, let me kind of explain what that is also. It's we want to help folks, but there might be some families or some buyers that are eligible for $400,000, only want to buy $200,000. Their debt to income ratio is only 25%. I mean, that's highly unlikely right now in this mortgage and this real estate environment. But they're not going to need the down payment assistance. We're going to save that for another family that does, because their payment to income is very, very manageable, right? So that's what we look at. So that's the breakdown. Now, when I say this, this is 4 layers of financing with 4 different guidelines on each. Now, I know that a lot of people say, well, see, that's where it's complicated. That's where it's difficult. You have to, there's too many, anything could go wrong. Before we hand out that pre-approval, we've already vetted those folks for all layered financing and aligned all of those stars so that very little could go wrong, and very little does. When they are programs, down payment assistance, that are outside of our control in most cases, some of the municipalities have gone through some learning curves and some growing pains, and we've been guilty by association when we've had those down payment assistance programs included in there. But even then, we've worked, with them and helped them very early on to design, to work with these programs, and then finally they're running with it. We are now, though, talking with municipalities, different ones around the county. There's 10 major cities, 10 cities in the county, but we've spoken with many of them about possibly managing their down payment assistance programs for them, because there is a lot of work into this. We're focused on this 100% of the time. They're not, it's a lot. They've got to look at developing new properties, building permits, all of this other stuff that takes up a lot of time to do this, to look at homes that are about to be sold and they're resale restricted, to look at all of these guidelines. So, again, they're looking at us to possibly assist them with it.
Alex, just because out of respect for your time and everybody's time who's been on here, man, everybody has stayed on, and thank you guys. And I hope this has been helpful. I'm going to unmute everybody just so if they have any questions, they can ask you questions for the last 5-10 minutes, just in terms of what comes in. Is there anything else before I unmute it that you wanted to make sure that you shared with everyone?
No, I'd love to open it up for questions, actually.
Okay, perfect. Let me do that right now. Okay, so I unmuted everyone. Yeah, thank you guys all for joining. I hope that's helpful. Any questions for Alex? I know it was a lot. There's kind of quite a bit to take in. I hope we were able to keep it simple enough to really, understand. But has anybody used down payment assistance before?
No. I haven't.
No. Has this piqued anybody's interest?
Definitely.
Well, long enough to stay in. No, I mean it when it really is one of the best kept secrets out there for many different reasons. But it is, I think, in everybody's best interest also to try to learn more about this, because there are many people that can use our help, and it's going to be by word of mouth, and it's your level of commitment and professionalism on your part. Yeah, I'm just trying to think, because we talked about the process. Just any questions, I guess, for next steps or what's happening right now in this lending market. Just any questions that you have about how it works.
Yeah, I do. Alex and Brandon, thanks for your time. This is Lisa Kozin. I've actually referred people to Alex, and I've heard about the VCCDC since I started. I think my clients, it's always kind of like, if they make too much income, but they don't have the down payment. So that's kind of the struggle that I've seen with some of the clients that I referred, but they're renting. So they just are not able to save up that down payment, but they really, really want the ownership, and so I wanted to see, is there a flyer? I was looking on your website right now that you just have the breakdown, like how you said a family of 4 making $85,000 a year would be able to qualify. Is there something that I can email you and you can just, send me a bunch of flyers? Because I do have a lot of people that I always want to, send, but I don't know if they would even fit in that category.
Hi, Lisa. Yeah, so that has been a major issue, and we've been pushing for the moderate income, as you mentioned. They're earning too much, but not enough. Yesterday with Brandon, we had the conversation of rental prices. It's really difficult, even for moderate income. Somebody earning $80,000, to be able to save in this county, as expensive as it is to rent. So we have been pushing for that, and the Cal HFA program would allow that to happen. So that's where this up to $100,000 for moderate income home buyers could assist. Now, there is certain stipulations that do require sometimes buyers' own funds or skin in the game. I don't necessarily like that word, but that's a way to kind of describe it, or their own funds. Is that with the Cal Home, they do require 1% of buyers' own funds. So if they're buying a $500,000 home, that at least $5,000 is coming from their own monies, right? Not a gift. So we've heard that message loud and clear, and we've had plenty of clients that are in that same boat where it's very difficult for a moderate income family to buy in Ventura County right now. We know that. That's definitely not a secret. So I feel that pain, Lisa, and we're doing as much as we can. You know, a lot of the meetings that we go to around the country is to how do we do this? How do we help specifically in Ventura County? You know, because when we go around the country, we're meeting with people from all over, all 50 states, and they just don't understand to realize that they know that California is an expensive state. I mean, that's no secret. But not very many people know about Ventura County. You know, it's Los Angeles County and all the other major counties. But we want to bring and shine the light on this is what's happening in Ventura, in Santa Barbara counties, in Los Angeles counties. It already has a big enough megaphone. We're trying to bring more of that information that you're talking about to our representatives and to people in banking for Ventura County. And they have been listening, and that's where these programs are happening.
And you mentioned yesterday the CalHFA, I think their limit is, I mean, it's pretty high now in terms of what they can earn income. Do you remember how high it is, Alex?
193,600. So Lisa, realistically right now, somebody that's earning up to that, you know, that's going to be probably 90% of the population or the folks, your clients. They have an opportunity now through the CalHFA program to be able to buy with very, very little money down. And they assist with the down payment and with the closing costs. Now,
was it up to 10K now? Is that what you said? About 10,000?
They're limiting it up to 10K. They have made those changes. Now, if you know anybody, if anybody of your client, any one of your clients, Lisa, is working in a school district, K through 12, those programs haven't changed. They're still providing up to the 4% of the amount. And so that's a great way to market to teachers or anybody from janitors to office staff, administrators in the school systems, because there are programs specifically for them that way.
Great question. And Alex, if you can send those flyers over to me as well. I tried to pull some off the website. I know I CC'd Kaylee on the email as well, so hopefully when I get it. But if you guys also send me an email, and Alex, do you want to just put your email out there again one more time for everybody?
Yeah, so my email is avega.
Try to put it on the chat.
At VCCDC.org.
Okay, great, thanks.
And do you mind also sharing your number with this group as well, Alex?
Yeah, I'm gonna share my cell phone with you guys. Okay, it's 805-896. 1296.
1296. And I didn't.
Don't put that one up for everybody though, Brandon.
I know. Well, I put it on here. It's not on Facebook Live. None of this is all private here. It's our private recording. But yeah, no, I put your cell phone on there as well. And then, maybe at least that may be good to set up on a one-on-one with Alex sometime. I did that for a few people that I had started with me with Paradise Estates with my parents' first company. And do you remember Ken Sampson, Alex? Kenneth Sampson?
I do, yeah. I do.
He actually passed.
I know.
He passed to cancer. But great man, had a great heart. Helped a lot of buyers out. And Lisa, I know you're very active with many buyers as well. I guarantee there's people that can take advantage of these programs, and you're going to hear a lot of people say negative things. That's what we talked about before, kind of dissuading it. And it's competition. I mean, to be blunt, you know what I mean? They're concerned about losing. They don't want, I don't know. I don't want to say why people do it. Just more than anything, just find out for yourself is what I would recommend. And if you sat down with Alex, he'll break it all down for you and make you as close to an expert as you can become in that short period of time so that you can help a lot of people out. But I know there's some great information out there to learn. And then even the homebuyer workshops are awesome. It's going through it. You don't have to sit through the whole thing. You can sit through just the real estate or a couple portions, but then you'll know what you're advocating to other people. Once you've been through it yourself, it's like, all right, no, you guys need to check this out. These are all free services that are available out there because it's a nonprofit. So it's pretty awesome, but great question. Did that answer what you were hoping for?
Yeah, it really did. And that's kind of how I've been, I guess. My husband's a teacher, so a lot of referrals come from like teacher. And I've talked about the CalHFA. I've shared that website.
Right.
But I guess it's, it's also people's motivation and stuff, but I just feel like, I want to get a little bit stronger in that and just more knowledgeable. That way, when I do have those clients, because I have a lot of people in mind for this product, like, I just want to be able to just, set them up for success really with you. But thanks so much, guys.
Yeah. No,
Appreciate that, Lisa. Thank you.
Great
Gentlemen, I have a question.
Yes.
My name's Paula, and thank you for doing this.
Yeah, thank you for
So,
joining.
Alex, when all of this is, I mean, I don't know when this is going to end, but we want to get into a home pretty soon. I mean, we were shooting for August, but I feel like we should be taking advantage of the lower rates. So could we sit down with you like in a Zoom call? Is that something that you're willing to do? So me and my fiance, he's the one that's going to be on the loan. He makes a good amount of money. I'm not sure if he's going to qualify for any of this, but we do have a 5-person household. And we want to start the process. We've been looking for about a year or so, and I think we're ready.
Perfect. No, yeah, absolutely, Paula. We can definitely do that. Do you mind if I ask you, Paula? You've been looking for about a year, you mentioned, and you've been actively looking. Were you pre-approved already, and what kind of?
No. So
No.
my fiance has commitment issues, and anything long term, he really takes care of his FICO score. It took us forever to even buy a car because he didn't want his FICO score ran.
Right.
He didn't want to be docked points. So he's just so hesitant about it. But I think that we've been looking at homes, and I tell him we're wasting her time and my time and your time because we don't even know if we qualify for these homes.
Right.
So I think he's ready. I think he's the one that told me about this call. So for me, that was like seeing a rainbow, because that means
wow.
he wants to get the conversation started and he wants to do it. So even now I'm asking him, hey, how much did you make last year? He's like, why? What do you want those numbers? So we're ready, and this is exciting to me, and I would love to be able to set up a Zoom call with you to see if there's if he qualifies.
Absolutely, I'd be happy to do that. Especially catching him right now that he
he's hot. Yeah.
That's awesome. Thank you for joining us.
Robin,
I'm glad that you
congratulations
hopped
on your engagement there.
Yeah.
You mentioned fiance. Congratulations.
Yeah, thank you so much. I'll email you our information and your earliest availability, of course.
Okay. Thank you, Paula.
Thank you.
Yeah. Leslie, Bobby, any other questions you have directly for Alex? Actually, I'm seeing one from Bobby right now. The question is, are the loan qualifying requirements more relaxed? My clients have been having trouble qualifying for a loan. How would you answer that, Alex?
So two parts. For certain portfolio products, they are more relaxed, but we still have to go by, if we're going to sell them to the secondary market, Fannie Mae, Freddie Mac, FHA. Those are still guidelines, right? Those are still going to be the guidelines there. The down payment assistance themselves, though, they're not FICO score driven. If we can get any first mortgage approval, then we should be fine with the down payment assistance as well. So I think one of the questions would be, do we know why, what the difficulty that he's having in getting that approval? Is it a credit situation? Is it maybe the down payment or the ratios? If it's ratios, this could potentially be that saving grace for them, right? Because we're going to be reducing those ratios if they are eligible for the down payment assistance. So that'd be question number one, obviously.
Okay. Bobby, and feel free if you want to ask him directly with that. And then Leslie also has a question too. So either way.
Essentially, they've been having problems coming up with the documentation needed to show their income. They're making the income, but they just don't have the documentation
To prove it.
Yes.
Got it. Yeah, so that'll be definitely a challenge, right? And and this is, I think, where we Barbara, right? It's Barbara?
Yeah, or Bobby.
Bobby. Hi, Bobby. Thanks for the question. So this would be a great way for someone like that to kind of, if we get this all the time, a lot of self-employed folks are, we don't want to, we're going to increase our expenses, buy more company equipment to reduce our increase depreciation, to not have to pay Uncle Sam too much. But it actually hurts them when they're trying to show the purchasing power to buy a property.
Mm-hmm.
And we go through those conversations and plan out. So this could be, Bobby, someone that's, okay, what do we need to do? What do you need to show if you're going to buy something? What do you want to buy, right? Where we can plant the seed to get them ready, especially right now that they're going to be doing their taxes this year. How they're doing it may actually affect what their purchasing power is going to be. So if they do earn income, but aren't able to prove the income that they're earning, that definitely will make it challenging, Bobby.
Okay, thank you.
Yeah, no, great. And then Leslie's question is, can more than one program be implemented? And you may have to break it down a little bit more, Leslie, just, specifically, but are you referring to the different layers of financing, or are you referring to how sometimes River Park has certain properties that become available that are affordable, and then somebody's been qualified through the down payment assistance through VCCDC and they want to buy over there? Are they able to, marry the two? Is that what you're referring to? Yeah, we can't hear you on there for some reason. It says you're unmuted for whatever reason. The microphone's showing, so you may have to text it, Leslie. But Alex, what would you say to can more than one program be implemented?
So I'll take that. I'll assume that what she means, can they all be combined? So the answer is yes. And that's what we did in that example with the $70,000 family. When we provided $70,000, we showed that, I'll go back to your example, of $500,000, for example. If we do a $500,000 purchase, they're getting potentially up to $25,000 in $25,000 in VCCDC Cal Home Loan, $22,000 in the WISH program, and $23,000 in the Hope to Home. That's the $70,000. So that $500,000 purchase, that they don't have to qualify for $500,000 anymore. It's more $430,000. So the $430,000 first loan amount, assuming that they're not putting any of their own funds to the transaction itself, but paying closing costs, for example, then we have the other layered financing that combined would be a loan to value of 100%. Right.
She actually clarified. So she has a client who's getting a divorce and is a teacher.
Oh, absolutely. Yeah. So then she's a first-time home buyer, right? Now, when we say getting a divorce, the divorce does have to be final. We do have to have the final divorce documents. But once that happens, Leslie, then she would be considered a first-time home buyer if she's being displaced from the home that they had, if it's being sold, if the other spouse is going to keep that home, non-purchasing spouse now, and then she's a teacher. She should be able to also purchase with a teacher's program or with our down payment assistance programs.
That's great. And Leslie's also another great buyer's agent as well. She's also bilingual, I believe, from Argentina, so speaks Spanish as well. So another great connection there to reach out to Alex. Leslie, when you get a chance, I would set up a one-on-one with him. I know we talked about it in the Wood Ranch office in the past. I highly recommend, the more that you understand how this all comes together, you're going to be stronger for all buyers. He'll help you with debt to income ratios. He'll help you just get a real good understanding of what kind of questions asked. I never would ask, okay, how much money do you make? Or have you had a foreclosure? Have you had you're going through a divorce? I wouldn't get into these personal questions. I didn't feel it was my business, and I didn't feel to have the right. But once I started realizing, well, wait a minute, if they've gone through these things, maybe I can help them out. It was a whole different type of approach in terms of the people that I was able to help out. So you will become even stronger than you all currently are. Bobby's also another great agent as well. Actually lived in Tehachapi for a while. So she, I'm sure, has people out there in Tehachapi that, obviously there's only so many that you can help out through the Ventura County, but I guarantee there's programs out there that maybe Bobby can, do a little bit of research as well. She does business out here too, but she also has a huge following out there in Tehachapi. I know listings and things were coming up. I hope it's okay I'm sharing this, but just trying to show just how awesome just this call really is. And for Alex, for you to make the time to share this all with us, I really think you planted some good seeds here.
No, I appreciate the time to be here, and thank you guys all for the questions. What I will say, as Brandon mentioned about the debt to income ratios, I fully am a believer that as much information agents can have on the lending side will also make them a lot stronger, because when they're listing agents and they, not to fully rely on an LO to give them, is somebody going to be closable, right? At least certain questions that you'll know that are, game changers, or deal breakers, certain bankruptcies in certain times, what the ratios are, how difficult that's going to be when ratios are a little too high and their FICO scores are not as high. Certain things like that is the more that you can grab knowledge. It's not rocket science. It really isn't. Right. It is just a lot of math, but the questions that you can ask will make you a stronger agent than you already are. You know, and
Minimum.
Brandon, as we talked about it early on, we had a lot of discussions about this, and you know, here you are talking about this as if you're an LO. You know, when you're talking ratios, you got it right.
Well,
And I joked around with you saying I'm going to bring you on the lending side.
It's cool. I mean, it is a lot of good information, but it's huge. And to represent your clients on the seller side, you brought up a good point. Knowing that, that's why I always request a DU approval or an LP approval, because I want to see what the underwriter is spitting out. I want to see that debt to income ratio. I want to see the credit. And a lot of people want to be very careful with giving that information, but I can also tell, did they just get a quick little pre-qual that would just spit out, or have they actually submitted everything that they needed to? So it does a few things for me as a listing agent to really vet my clients or vet the potential buyers, because there's a lot of already challenges and issues with the current climate. So if you don't do this work up front, if you don't work with a lender like Alex and do all the work up front, you're setting yourself up for problems and challenges that are going to come up. And then we as agents have a hard time protecting our clients through contingency periods and protecting them if we don't truly understand really what's going on. You can't just rely that, okay, Alex is great at what he does. I'm going to try to be the best at what I do. I have to know a little bit more about what he does. He needs to know a little bit about what I do so that we can communicate, work together, collaborate, and then also work with the other side to get it done. So it's huge. And it just seeing you on these calls shows your level of commitment to becoming the best that you can be to truly service your clients. So that's our goal with this, and very appreciative of all of you. Any other final words, Alex, that you'd like to share with everybody?
I just thank everybody for being a part of this. Thank you for the platform, Brandon,
Yes,
for what you do. And, you know, again, it's about educating everybody. You're definitely not selfish about the knowledge that you have. The more people that know information is better for our industry, I think. And I'm the same way. You know, whatever we can talk about, whatever I can share, like we did with you and everybody else, the more people, the more informed we are, the better results we'll all obtain, and for the benefit of those in our community that are trying to buy and buy responsibly. So thank you for that, and thank you everybody for joining. And I hope it was a little bit helpful.
It was
Yeah,
great.
Yes, thank you.
Absolutely. And I'm going to put my email on here. If anybody wants to shoot me an email on this recording, I'll forward it over to you. And Paula, thank you for joining. That's awesome.
Yeah, thank you guys.
Yeah, I hope it was helpful. And then if you want to share this video, as long as the other agents are okay with it, we're not going to put it on social media just for privacy reasons, to respect everybody, you know, because we're helping everybody out. Other companies, other just agents that really, you know, I care about and want to see continue to grow and succeed. So if you want to shoot me an email, I can send you this recording. You're more than welcome to share it with your husband if it helps, and anybody else that you think may want
would it be okay to send it to the real estate agent we're working with?
Yeah, that's perfect. We can do that. I can send it over, and we always respect those relationships as well. So I'm going to just put my email on here, and then if you want to have your agent reach out to me, I can send it to them as well.
Perfect. Thank you.
Yeah, no problem. Thank you for joining us. All right. Any other final questions before we hop off? We got Bobby, Lisa, Leslie, and Paula.
No, I'm good. Thank you. I just emailed Alex and I'm shooting you an email now.
Beautiful. That sounds good. Well, as soon as I upload this to YouTube, I'll put it on a private link. I'll share it with you all, and feel free to check it out. And if you have more questions, you know, Alex is here for you. I'm, you know, also here for any of the agents here that need my help as well. And if you want to put your agent in touch with me, I'm more than happy to break down whatever I can for your agent as well. Your agent's name, do you mind if I write that down just in case I get reached out?
Yeah, her name is Elizabeth Peña.
Elizabeth Peña. Great. Awesome. Yeah, if she reaches out, I will I'll definitely, you know, help in any way that I can as well.
Sounds good. I appreciate it. Thank you.
Not a problem. You guys have a great day. Alex, that was awesome, man.
Thank you.
Yeah,
Thank you, everyone. Stay
Yeah.
safe.
Thank you, Bobby.
Thank you.
Thank you,
Have a good
Leslie.
day.
Leslie.
Stay safe.
Thank you.
Yeah, you too. Leslie also said thank you, Alex, as well.
Thank you, Leslie.
Yeah, no, it's you made some great connections here, man. I appreciate you making the time. I'm glad we did this follow-up today. You know what I mean? So I'll wrap it up here, send it to you. You take it easy, bud. Let's connect again soon. Even if we just do a quick Zoom meeting, man. You know,
Let's do that with a beer in front of us.
That's right. Long overdue. I got to pick up some beer first, man. But yeah, but we'll do it, man.
I heard
I
they may be closing the Modelo factory because it wasn't an essential service, so you better stock up fast.
I better get there soon then. But thank you, Alex. No, it was awesome.
Great meeting
I
you.
hope you enjoyed that too. Was that pretty cool?
That was great, man. I used to see people right now, you know, and
Yeah,
when you're
right?
not seeing anybody, it
That's
feels
cool.
good.
All
So
right,
that's
man.
great. Great
Well,
crowd, great people. Thank you.
thank you, and send Bertha our best, and I'll try to be in touch with her soon. But just
Thank you.
anybody else, just let me know. All right, brother. You
All
take
right,
care.
man.
All
Yeah.
right. We'll see you. Bye.